April has been an absolutely crazy month so far. The market just can't seem to make up its mind one way or the other in terms of the direction it's going. The on and off again tariff situation has caused volatility just to be absolutely insane. And that's caused a lot of problems for people trying to stay in the market and to get reasonably good profits. Volatility is a good thing usually, but sometimes when it gets so over the top that it just becomes unpredictable, it becomes destructive. And that's really where we're at right now. It's become so crazy that it's disrupted the market in a very dynamic way. Hello, I'm Robert, and welcome to my channel, where I discuss everything automated algorithmic trading, or simply algo trading. We are looking at my live chart where I'm demonstrating some of the volatility we have seen recently. In trading this market, my grid bot has done well, but it's not the only way to trade this kind of market. And in fact, really, trying to find strategies to trade this market has been incredibly difficult. Strategies that can actually survive it has been even more difficult and has required some interesting and unique thinking in order to accomplish it. We're going to get into one of those strategies that I've been working on with Jackrabbit TV to demonstrate just how to actually navigate this little madman market. So let's get straight to what we're looking at right now on the chart, which is my live trades, my real account. The April month has just been crazy. The candles have been absolutely over the top insane for volatility. Now, I've taken a few stop losses, as I've talked about previously, but the volatility has been so well that I've actually ended up regaining quite a bit of what I've lost in my stop loss. For example, I went down to 1509 for my budget, and just because of the volatility, I've already regained roughly $20 just in a matter of a few days. So the market is rebounding quickly with the right strategy. I thought it was going to take me roughly a month to regain what I lost from the stop losses, but that may not be true given what we see on the charts. Given the level of volume in the order book and the actual level of market activity between the buyers and sellers, I suspect that this market is going to recover quicker. But that means that as I continue to trade, as I continue to look for opportunities, I need to be capable of seeing the bigger picture, of seeing where the market is going versus where it has been. And in fact, if we go up to the highest time frame and we look back, the yellow lines are where I am currently looking at my range. We are closely entering in that range. And that range really is an important standpoint, because if we can achieve this range, then the market will have a stability effect that will improve trading overall on a wide scope of profitable options. Right now, market volatility is difficult, but if we can get into this range again and start really trading it consistently, then the market itself will show a good, strong standpoint. But there's a problem with that. And that is that we need to have a fiscal policy as a country that is stable. So either one, we go down the road of tariffs and we just bite the bullet and suck it up, or two, we stop playing these games with tariffs and we just deal with the market as it is without weaponizing it. Tariffs had a place when the United States was a producer country. Now that the United States is primarily a consumer country, it's simply more destructive than beneficial. We see that historically with the Smoot-Hawley tariffs that many economists attribute to the Great Depression and the prelude to World Wars I and II. We need to really look at those contexts. Tariffs have a place, but you have to make a decision one way or the other. Either you do it or you don't. You can't move back and forth and expect the market to be able to handle the uncertainty and the unpredictability that has gone on. If you're going to have that kind of a market, then you need a strategy that can handle the obscenity of the volatility in such a crazy way. So that is really where our next step is going to be. As we look at this chart and we see we could reclaim pre-pandemic levels for pricing, we need to really function on the marketability of the strategy to continue with the volatility. So let's get into the chart and actually take a look at a strategy that does that very well. If you find this video helpful, please give it a thumbs up. Leave a comment and let me know. Now let's get into the chart where we have a strategy on screen that is an accumulation strategy that does well for this crazy volatility. Now this is using Jackrabbit TV, so let's actually look at the metrics. I am trading Euro Canadian at the moment, but it works on any Forex pair. And it will probably work on any crypto pair as well. And we're going to cover some of the details as to why in a little bit. But right now you can see 30 trade cycles with a rough average of about 20 pips per trade cycle. That's pretty decent in that it is going for about 20 days. So you're looking at, roughly speaking, 600 pips of profitability. That's a lot of market profitability for the level of trades that this has taken. Now the important part about this strategy is how much accumulation. An average of 2 positions. That is incredible considering how volatile the market has been. And so far a maximum of 4 positions per cycle. So we're doing very good and very controlled in terms of just what we are taking for positions. So if you're doing a large number of trades, you have a good, resilient, constrained process. That's critical. Having that kind of control over what you are doing is absolutely critical. Keeping your risks to a minimum. For example, if you're doing $10 per position, you're only doing an exposure of $40 maximum throughout the entirety of the last 20 days. That's 30 completed trade cycles with a maximum exposure of $40 if you follow $10 per position. Now, if you're using 1% of your account balance, then you've got a very controlled functionality. And that really is the secret of this strategy. So let's look at the actual strategy. We see the accumulation side of it, but let's actually look at the driving indicators. So as we go into the indicators, we can see a simple MACD and a simple RSI. So let's look at the MACD indicator first. Straightforward, very simple, nothing complicated. One of the most important things about this market is you have to remain simplistic. A simplistic method is the best way of accomplishing this. So let's look at the settings. We can see that there's really nothing over the top here. We have basic normal MACD settings, 12, 26, 9, and we're using just a standard EMA. Simple and easy. So nothing special with MACD, but the trick, the trigger point, if you will, or the confirmation, is really the RSI. We are using RSI in such a way that we're using it for momentum. That is, anything above the green line is a buy signal. Anything below the green line is a sell signal. So by using RSI for momentum, we're catching the market when it's going upward, when it's going in the direction of the trend and the direction we want to go. So if we look at the two markets, or the two indicators, we can see by looking at when the market is moving, we can see how that works in our favor. We can see how we actually catch the market moving in the trend. Let's zoom in on a few of these entries and actually take a closer look and see how this plays out and how this actually builds so that we can actually track and catch this volatility. And that really is the important part. Capturing the volatility in such a way that we are able to profit from it in a reliable context. So here we go. As we continue to look at the market, let's take a look at this one section. So we have a trade on the screen. We see right here, this trade goes from one buy signal to one sell signal. And we see that the market is generally moving in an upward trend. Now this is confirmed by the RSI, as we see the value over 50. Now we have the entry point of the MACD that confirms everything nice and tidy. So what we end up with is a 20 pip take profit. And this only took one position, which is exceptional. So by looking at RSI as a momentum indicator and using MACD as an entry point confirmation, we can try to capture the market in such a way that we have the trend. And by having the trend, we mitigate how much our accumulations take place. That's why this does so well. That's why this entire process is able to mitigate the market and take so few positions, because it is able to try to capture that trend. And even when you look at the market that shows a larger level of positions. You still have a clear and concise level by which we can function. For example, we see here we have an accumulation. We see here that the market didn't quite get it right and it dropped. And we see that drop and then the second purchase. But from there, because of the way the strategy is built, we're able to mitigate how much we actually take on. And then we're able to simply follow it to the profit. So even though we've taken on two positions, we have a very controlled amount of exposure. And we have a marketability that just does well. So let's take a look at what this looks like on a few other positions. Let's actually see how this handles volatility on different pairs. So the Euro Canadian is quite well. Now I'm not going to change the direction. This is all long direction with a 20 pip take profit, 20 pip deviation. Simple, easy, straightforward. So if we go to Euro Australian dollar, let's zoom this in and we can see 34 trade cycles, a maximum of 4. So yet again, we see that the worst case scenario is limited. And through that limit, we control exactly how much accumulation we take on. Let's go up to Australian US dollar. We see again controlled limitation. This time it's 5, but the average of 2. So we see yet again RSI working as momentum with the confirmation from MACD to get exceptional signals. So hopefully this will demonstrate exactly how to deal with this kind of a crazy market. That when the market volatility really becomes unstable, using RSI as a momentum can actually help you get in and out of the market in a way that gives you some very profitable entry points and some very profitable trades in general. Let me know what you think of this technique. Do you use RSI as momentum, or do you use a regular EMA 200? Share your thoughts. Leave a comment below. And remember that all of this is Jackrabbit TV. The links will be in the description below if you want to subscribe to it to get this kind of information. Thank you for watching.